What is going on, guys? Jezzi here with One of One Traders, and this was my trade from February 13th. So let's get straight into it. This trade was sent out live into my group, which is One of One Traders. This trade did over 240% return. Let's get started. So, just for, verification and whatnot, as you can see, 2:13, 10:12 a.m. time on the chart. Actually, right here. Boom, right here. Look. 10 to 2:13, 10:12ish on the chart. That's the entry. 5:33 calls. First trim is 5:32. Oh, whoops. First trim is 532, as you can see, 532, and stop zone 530.37. Obviously, I trail that as the trade goes on, but that was the initial stop zone. Sent that out live with, my, ideal, what my idea is. And I also want to show, if we go here, Jezzi. Oh, I need to find 2:13 in the morning. This trade went pretty quick. It was only like 30 minutes. One sec. Okay, so look, before this even happened. Oh, that too far, too far, too far, too far. Before this even happened, I sent out 10:04 at 10:04 at 10:04 here. Nope, 10:04 right here. Right here. Watching for the retest, then gonna enter calls. 10:04, which is right here, watching for the retest, and then entering calls. Not only giving you, or giving, whoever saw this the right idea in mind, but also sending the entry live. So, I mean, now that you guys know that this was all, broken down live, let's get into it. Let's get into the actual trade. So obviously, went calls here in this scenario. These contracts did about 240%. Let me show you. 94%, 113%, 240%. Boom. All right, and these contracts went from 2 out of the money to 5 in the money. Uh, so pretty cool there. Okay, anyway. Trade analysis. Why did I take this trade? Okay, so we can see immediately the way I like to do it is I like to map out, the pre 15-minute pre-market highs and the pre-market lows. Well, also overall highs and lows, like I'll map this out, but then like more in specifically, if we're looking for like a momentum move in the morning, typically I don't trade off momentum, but like in the morning, you kind of got to go base off of it just a little bit because, it could pull one direction and then that's where the volume shifts. So you got to be ready and you got to understand, like, if it's just going to hit a certain level and then reject from there, hit a demand zone, or if it's going to hit a supply zone and then reject from there. Excuse me. So, so as you can see, this is a high I'm looking for it to break, and then this is a low I'm looking for it to initially break. Comes up, breaks that high, retests, decreasing volume due to that previous buy candle. We have one strong buy candle, a little bit weaker, and then a little bit of a stronger sell candle, but still buyer absorption. As you can see, hits this resistance. Well, like this resistance zone here. I'm just gonna kind of draw it out because it helps people like visualize. I'm a very visual person, so as you can see, breaks this support here, or excuse me, sorry, breaks this resistance here, retests, rejects off of this previous resistance, now acting as a support, breaks back above this initial resistance again. Buy volume is increasing. This is where I sent out waiting for a retest, and I expected it to retest off of, look, I expected it to retest off of this high here, did exactly that, and then entered calls. Boom, and sent the entry out live. So I was shuffling through the 3-minute and the 5-minute time frame on this trade. So let me show you the 5-minute. 5-minute, you can see again, it's a little shows the levels show itself a little bit more cleaner. That's why it's super important to shuffle through different time frames. Like 15-minute time frames are really good, 30 minutes really good. I like the 30-minute to an hour, and then a 3-minute and 5-minute. Those are my favorite time frames. So I was shuffling through 3 and 5-minute because this was kind of still earlier on in the morning, and the 30-minute and 15-minute weren't doing the same job as these smaller time frames were doing for me. So as you can see, price breaks up above this high, retests, bounces directly off of this resistance zone on decreasing sell. Again, decreasing sell. Volume is just kind of starting to slow down a little bit here. Now it's starting to pick back up. Buy volume's increasing. Buy volume's increasing. Breaks back above this high. Retests on decreasing sell volume. And then I scale, and then I'll be like scaling down to the 3-minute. And then that is where I went ahead and took my trade, because you can see it came down here again, rejected right back up, unable to break this previous low, and then on the higher time frame on decreasing sell volume. So sellers are thinning out, buyers are now starting to step in, and it wasn't able to break the previous low. So took my entry. My first trim was 532. This is 532. Why? Because this is that initial resistance that it rejected at. Here in this scenario, the volume wasn't as high as previously, so you always got to factor in if it could just scalp back up, and then it hits a certain resistance or a certain supply, and it just drops right back down there, and then switches to the downside. But in this scenario, that was not the case. Hit my first trim. I sent out the trim up 45%. Options, if you pick the right strike price, you don't need a huge move to make big returns. But then if it moves in the other direction, then you're going to be losing. So you got to know when to enter, what contracts to buy, where to cut your stop. It's very technical, and there's a lot of different variables that go into it. Sorry, excuse me. So yeah, as you can see, smash through my first trimmed, and on my trim, I always hit a trim. So this is what I'm gonna do. I sell a certain amount of contracts, secure profit as like security, and leave the remaining contracts to continue gaining profit. Or what I'll do is I will and as soon as I take my trim, I'm trailing my stop to a little bit above break even, because with 0-day options, there's a thing called theta, which is time decay, which the longer you're in these contracts, the less valuable they become. So you need price to continue moving to your strike price for these contracts to continue getting more expensive and making you money. If it stays very if it goes up slow, consolidates for a little bit, the value of those contracts will drop, because the longer you're in them and the slower they're going to your strike price, they just start to lose value. So securing profit is super important, and knowing how to trail because you have to be able to trail your stop to above break even, because the same break even you're entered at, now that so okay, so hypothetically, look, this is break even at 10:12 in the morning. In 30 minutes, this is going to be your break even. You see what I'm saying? So trail your stops as soon as you take your trims. And you can do this with any amount of contracts as long as it's not one. If you have 3 contracts, trim 2. If you have 5 contracts, trim 3 or 4. If you have 10 contracts, trim 7 or 8. And then get comfortable doing that. Get comfortable doing base hits like 15, 20%, 30%, which is a lot for some people. That, fortunately for me, that's not really that much. But yeah. Okay, back to the trade. So as you can see, smashes throughout first, trim, hits a resistant, retests, again, decreasing sell volume. Why would you sell? Re-breaks back above that high, continues going up. At this point, yeah, I'm at like 113% profit. I'm trimming more. I'm continuing to trail my stop. Now my trailed stop is my first trim. My trailed stop is my first trim. Continues to go up, continues to go up. Right here, I was about 150%. Broke above my initial TP. That was around like 240%. These contracts at its peak were like 260%. So I didn't really... these contracts at their peak were around 260%. But I did not, take my final trim there. I took my majority trim at 240%. Set my stop to 100% profit. So I set my stop loss to 100% profit. And then I obviously got stopped out, but it didn't go much higher than that. And by the end of the day, through all this time, these contracts would not be as worth as much as here because of theta. See how much longer it took for price to come back above that high? These contracts would probably be worth maybe 70-80% less here this later in the day at the same level. So again, just super clean. Like, this is a super no, I'm not going to say it's easy because it's not easy, but this is a super, like, if you have someone to break it down for you, which I think I did a good job at it, then it's very helpful to understand because you have a visual like representation of what's going through my mind and why I'm doing each certain thing and this and that, why I'm waiting for it to retest. Why I'm waiting for it to retest, come down to this zone here, and then buy. Because if I were to buy here on this initial break, it wouldn't have affected me that much, but I probably would have lost maybe a few percent if I entered a little too early, because then I would have had to wait for this 5, 10, 15 minutes when I got the entry that I wanted. Because you can see it came all the way back down here, got the entry that I wanted, entered, boom. So that concludes this trade analysis. Hope you learned something. And yeah, enjoy your day off. I think it's Veterans Day or President's Day or something. But the stock market's not open today. So I will see y'all tomorrow. Peace out.